This episode of the Restoration Today podcast is brought to you by Actionable Insights. Actionable Insights is the restoration industry's leading educational nonprofit, helping contractors and carriers settle claims on the daily. Go to getinsights.org. Hey there. Thanks for checking out this episode of the Restoration Today podcast. Today, I am very excited to be joined by Ross Driscoll Jr. He is the Vice President of National E&S Insurance Brokers and the Vice President of Driscoll & Driscoll Insurance Agency. We're here today to talk about liability insurance, other insurance needs for your restoration company, and how insurance relates to M&A. And if you're going to be going into a transaction soon, some things to consider to keep yourself and your company or your former company safe and protected as you move into the future. Ross, thank you very much for joining me. Tell us a little bit about your background in restoration.
Well, thank you, Michelle. Very excited to be here with you. Very honored, in fact, that you thought of me as you're first getting started here with CNR. So very pumped for you. Stoked to see what's going to happen here. But like I said, I'm a principal at National E&S and Driscoll & Driscoll Insurance Agency, where we have the flexibility to support restoration contractors, agents, or serve them directly. So we have a wholesale and a retail agency. Retail agents need to go to wholesale brokers, someone like me, in order to write the needed pollution, professional liability, and some other policies. So with more access than any of my competitors and our expertise in this industry, we're a valuable resource for insurance agents all over the country. And before joining the family business, I was a contract surety underwriter at Zurich, where I wrote performance bonds for contractors anywhere from 10 million to hundreds of millions in revenue. So I had some really great mentors at Zurich where I learned a lot, and they certainly taught me the value of going above and beyond. So back to the industry that we're highly dedicated to, restoration supports more restoration business than us. And I grew up around the industry. In fact, my father, Ross Sr., he was a reconstruction contractor after the Northridge earthquake, rebuilding apartments all over the San Fernando Valley. So I've always had a passion for construction. And personally, I support restoration contractors of all sizes, folks that are just starting out, all the way up to some of the very well-known franchisors.
Perfect. Okay. So the reason behind this podcast recording is you have an article coming out in the September issue, which is the big relaunch. And so it relates to big topic in the industry today, M&A, and selling your restoration business and the insurance side of that, and what owners need to be sure they are doing to make sure that they are protected and the business is protected as they go into a transaction. So what was your inspiration behind this article?
And great question. So I've seen a lot of change in the industry over the past few years. I mean, really, who isn't talking about M&A right now? With interest rates being near historical lows and a ton of private equity on the sideline, it seems as though we hear about a new restoration contractor selling their business almost weekly. There's a lot of factors on why somebody might be selling right now, which I briefly touch on in the article. But in my own book of business, I've had at least 10 different companies sell over the last couple of years. And I have a few more people that have signed letter of intents recently. So it's been something that I've had to talk about a lot the past couple of years. And also, I wanted to come up with some fresh material, not the same kind of recycled, sometimes insurance is doom and gloom. And with everyone talking about M&A, I haven't seen anyone discuss it from a risk management perspective. So when these come out, there's two articles for selling and creating value through risk management. The first is all the insurance need to know when selling your restoration business. So some of the pre and post-sale things that you need to know. And then the second part will be how insurance can be a tool for increasing your valuation. And I understand that not everyone's in the market to sell quite yet, but I was always taught that your first day in business, you need to be thinking about your last day in business. So I think this is going to help a lot of owners out there.
Okay. All right. So for people that aren't totally familiar with M&A and what it looks like to sell your business, there is an asset sale and a stock sale. So what is, or purchase? So what is the difference between the two, and what are some things that contractors need to be aware of stepping into either one of those?
Sure. So in a stock sale, the buyer will continue the company and its corporate name and will assume all past liabilities going forward. In an asset sale, the buyer is simply purchasing the fixed assets, things like equipment, computers, vaults, so on and so forth, as well as your territory, and often hire your current staff. For most restoration businesses that are over 10 million in sales, it's more often a stock purchase. But those who are TPA heavy, they also tend to be a stock purchase as well, because many of the contracts are tied to that corporate name. For companies under 10 million, I often see it more common to be an asset purchase. So in the article, we'll rehash some of the differences between occurrence policies and claims made policies. And depending on how your contract reads, some may be able to walk away, wipe their hands clean, where others may need to purchase a tail for any liability arises from work done in the past.
Okay. All right. So talking about tails really quick, steering off course here for a minute. So you say in your article that a lot of times there will just be like this bonus tail that's maybe 30 to 60 days, but adding a tail on can be helpful. Can you give kind of an example of when you've seen somebody not add a tail and that's kind of come back to bite them?
Certainly. Yeah. We had somebody probably about 5 years ago not purchase a tail for their professional liability. They thought they were all good. And then a couple years later, a claim was presented and they had to defend themselves out of pocket. And I believe they spent about 300 grand. So pretty ugly. The mini tails that you'd mentioned, they only last 30 to 60 days. And, everybody will be able to read in the article how buying a tail usually is either 3 years, 5 years, or so on. And, but unfortunately, there's not enough coverage, not enough time there for the statute of limitations in everybody's state being 7 to 10 years. So,
okay. All right. So one of the ways that restoration companies can keep their premiums in check is obviously making sure that they have a culture of safety. So what exactly does a culture of safety mean when it comes to the insurance side of things? And do you have any examples of like a client or a contractor that you know of that's been really good with their safety culture and how that is translated into savings on the insurance premium side?
Sure. So there's a great quote out there. It says, "Safety is not a gadget, but a state of mind." So truly, safety in the workplace needs to be priority number one. We all know that everything always falls on leadership, right? So when a team knows that safety is your number one priority, it's much easier to build their trust and gain their confidence. So in the long run, when safety's first, it will increase your productivity and margins, which is important to every business owner. When part 2 comes out, folks will be able to read about how training leads to buy-in, which then leads to accountability. And having team rewards also helps, because everyone loves incentives, right? So I know a contractor who had a frequency of auto accidents. So they really had to take a look in the mirror and figure out, how are we going to put an end to all this? They hired a dedicated safety manager who rewrote all of their safety training, required safety meetings weekly, and they were sure that everyone knew that there was consequences if they violated the rules. So I've also heard of companies including quarterly bonuses out there for the whole team if they're accident free. And we all love to eat. So I think hosting barbecues from the owner, it's also a great way to reward the team and really, earn that buy-in.
Okay. All right. So no matter if you're selling or not, having claims can hurt the valuation of any company, can hurt the bottom line, can hurt a lot of things. So what are some other things that contractors can do to protect themselves against claims?
So of course, a big general liability claim, pollution claim, workers' comp claim, they could all have huge consequences on your future premiums, which also negatively affects your profitability and EBITDA. But those have been discussed every which way to Sunday. So I feel that the coverages that aren't required by the TPAs or the franchises are the ones that can really come back and bite an owner. Employment practices liability, EPL, for one, any lawsuit that's brought by an employee, whether it's sexual harassment, wrongful termination, discrimination, wage and hour, these aren't things that are covered by your general liability. And I estimate that less than 10% of restorers actually carry EPL. Cyber liability is another one. as with all businesses, you likely have employee and customer data, which can include names, phone numbers, addresses, bank information. Now, whether you're hacked or you lose your laptop at an airport, lost is the same thing as stolen if personal information gets out there. Employee theft is another kind of coverage that not many restorers have. And it's also known as employee dishonesty coverage. It can be purchased on a crime policy or endorsed to a property and marine policy. In fact, our own company, we were a victim of this ourselves a little more than a decade ago. We had a bookkeeper steal $260,000 over 3 years. And luckily we had a $250,000 limit. So I always tell people, this coverage is very inexpensive. You can get like a $500,000 limit for just a few $100. So there's a couple other claims that we'll talk about in the article, but those are a couple of the big ones.
Okay, perfect. Okay, so you teased it a little bit. There's a part 2 of this article coming in November. Do you have any more of a little bit of a sneak peek of what's going to come in that?
Yeah, I can sum it up real quick, really by adding 3 things together. So if you have a culture that is committed to safety, you work really hard to keep your loss experience low, which of course reduces your premiums, and you manage all your risks by asking, what am I not covered for? And then fill in those gaps. You put all these together, I think that you're going to set yourself up for having a higher valuation.
Perfect. Okay. So going back, I want to go back to the cyber thing for a minute. I know that you've written articles about this in the past as well. So have you seen restoration companies run into issues with cyber, security and all of that information getting stolen, liability? Have you seen contractors run into that?
Yes. I've seen it where maybe somebody was sent an email saying, hey, send the check over this way. And, they went ahead and sent the money. So, depending on how the policy is written, that may or may not be covered though. I've also seen, other things happen where somebody lost a laptop and all the information got out there. And so they had to notify all of their customers, with the mailers and putting everybody on notice. So that could be really expensive if you don't have a carrier backing you up and sending all that out.
That's not a route that I thought of about losing data. I guess in my head, like a data breach is always, Target or something like that, where it's somebody gets into their database. That's completely different. That could easily happen. An iPad or a laptop or something goes missing on a job site. And that's, okay. I never thought of that.
Yep. Lost is the same thing as stolen.
Oh gosh. Okay. All right, Ross. Well, thanks for all the insight. Anything else you want to add before we wrap it up?
No, I think, this is a really interesting topic right now. And for me, I really don't get anything out of this. There's no personal benefit to me to discuss these topics. Really, if anything, I'm teaching people kind of how to leave me eventually. Got to make up for the lost revenue, but that's okay. Very dedicated to the industry. And I know that this is going to help a lot of owners out there. So happy to do it.
Perfect. How big is your company now? How many people are involved in E&S and Driscoll & Driscoll?
Yeah, there's a little more than 25 of us. And as you know, we just opened a location here in Reno. I'm working from my house until our office is open. So I finished my undergrad at UNR and they actually just started an insurance minor. So the opportunity to go grab a bunch of kids out of the College of Business and train them up our way, that's a huge factor of why we came here. So I want to continue growing organically.
That is very smart. Hiring is not easy no matter where you go. So go where they are. That's smart. I love it. All right, Ross. Well, thank you so much for your time. I appreciate it. Have a great rest of your day.
Thanks, Michelle.
For more Restoration Today, visit our website, cnrmagazine.com, or find us wherever you get your favorite podcasts.